Welcome to the end of week macro wrap up. Let's just hop straight in. First out of the gate, we've got Monday. Let's have a look. Not much exciting going on this Monday. As you can see, main thing here was the Powell speech. I didn't catch it live, but mainly the highlights were kind of him just saying the same as normal. A couple of quotes I managed to grab were Powell says US data offer confidence that inflation is on the path to 2%. He also said risks to employment and inflation goals were now balanced. Latest 3 inflation readings add somewhat to confidence, so pretty dovish remarks from him. We also saw more speeches on Tuesday saying pretty much the same thing. There was a lot more impending risk to overcooking things. But that's normally what happens, but we'll see if they manage to thread the needle this time. Let's move on to take a look at Tuesday and start off with the retail sales month over month. You can see it's flat, lower than forecast, and not ideal. So we definitely know that spend is shrinking for the retailer. The consumer's getting a bit tired. We've known that for a while. We're seeing the numbers here to corroborate that story. In one sense, this is good because it encourages cuts. That will get us back to expansionary numbers. Obviously, if we look closer here, definitely on a decline here. Auto sales are weighing down this number, though. If we take that out, things don't look as bad as we expected. They're a little bit higher. So, and especially if we take out gas, they look even better. So this is the gas reading, 0.8% growth, and retail is 0.4. So definitely seeing the big ticket items, such as cars and especially houses. We've seen that data. A lot less spend there. But I did want to note that these retail figures are adjusted numbers, so in reality they probably are in contraction if they're trying to keep it above 0% here. And then if we move along to Wednesday, we can see there's a lot more housing data here. Obviously, I think the market's still ignoring this, so it's not swaying things a great deal, but there are some decent numbers here. There's more housing starts and building permits rising. This is good. I like this. Mortgage applications and finance also up. Can't hate it. That's going to do well for SoFi, which is one of my core positions. The fact that refinance is going up. Love to see this. Very excited about this. Can't wait. All those SoFi haters. As well on this, we've got manufacturing data. The data is ticking up. Not huge numbers. Not expecting it to be huge. But like I talk about a lot, I'm not super interested in the manufacturing numbers. I'm more interested in services. So yeah, we can just move on. Thursday, not overly exciting. It seems like there's a lot of data coming out on Thursday, but we've got more mortgage data. Nice to see this one tick down though a little bit, so that's going to encourage some probably more refinancing. We did see a couple of Fed speeches today. We had Daly and Logan. Not too much exciting there. They mentioned a bit of it's getting a bit close to say they need to start weighing more of the risks and consider cuts pretty much. So dovish remarks overall, I'd say. Although I didn't listen to the speeches directly, you'd have to double check that. We can also take a little look at the initial jobless claims here. Obviously, they've definitely been ticking up. We don't like to see that, but again, it feeds the narrative for cuts. I'm glad to see they're not going over any insane levels. We're still under this 2023 peak here, which we like to see. Overall for this read, though, if we go back, we're higher than forecast, definitely, and higher than consensus. But like I just showed you in the previous image, not too high where I'm alarmed. The continuing jobless claims. If we zoom out a little bit, these are grinding up. We don't like to see this. We're seeing more people lose their jobs and struggling to get back into the economy, get back into the workforce. Obviously, this is good for cuts. Not good if you're one of those people that can't get back into the workforce. Business conditions also up a lot. The new highest level since 2021. If I can find it on here, I'll give you a look. Obviously, this is all state specific. We get this statewide data all the time since here. So overall, big picture, manufacturing is doing well in this state specifically. But like I mentioned earlier, it's not one of my key interests. I'd rather look at services data. If services was doing this, I'd be very excited. And then we've got Friday, not much exciting happening here. We've got more speeches. Good time to say though that I do apologise if the audio is not as good on this one. I'm a bit bunged up from allergies. It's been raining pollen here, so I do apologise for that. Now we can take a look at some of the metrics we like to follow. We've got freight up first. I'd hope this had come down a little bit more substantially from the pause we had last week, but at least it's not going up, so we'll take that as a win. A little bit further down, we've got the dollar. I think we talked about this last week and the week before that a strong dollar is not helpful, especially for risk on international and small companies and stuff like that. Essentially, all the companies that my portfolio will benefit from. If we have a strong dollar, it won't be good. The good news is we did break down this key level here, and it's come down even further. It's now hitting resistance on the EMA line here. Love to see it. I would love to see this one break further down. It looks pretty bearish to me from this point of view. Like it's just having a nice little back test here. So I'd love to see it. I hope that continues to break down. Oil too. Again, for the last few weeks, we've been talking about how we need this to come down, and all this confluence here with these diagonal trend lines and the Fibonacci. Initially, it looked like it wanted to break out, but these lines were going to hold it down. Happy to see it. It does look like it wants to break below this bull market band, which would be awesome. That would see us back down to this level for resistance. Sorry, support, should I say. At which point I would expect a bit of a bounce, maybe back out of this trend to this fib line again and then continue its way back down, especially with the news that Trump wants to lift up US oil pumping, so oil drilling, sorry. So that'd be good news for this, or bad news, whichever way you look at it. Lithium as well, down again. Good news for Tesla or any battery energy storage type company you want to invest in. Agricultural, we always love to have a quick look at this to see what the broader impacts of inflation will be. Obviously, we've got cocoa down a little bit, having a pretty big drop this month, and rice, even though that wasn't too bad. So we're seeing the same sticking areas, but overall, on the monthly, most things are coming down, or at least having relatively small gains. Weekly, we would have liked to see a bit more red. Obviously, we've got the large drop in cocoa. Not much else to say on that one. You can, if you click on this link here on my website at www.thecraftytrader.com, you'll be able to get access to all the commodities and a much more detailed write-up of all the topics we're discussing in this video. If we scroll down a little bit more, the CME interest rate probabilities, the probabilities of that happening in September, huge. Not as huge in July. I mean, we're probably going to stay the same. Is anyone shocked by that? Probably not. But it does mean that if we do come to the next meeting and we don't have a cut, the market's not going to have a big old wobbly, which we like or don't like. If you wanted to buy the dip, that would be a great dip buy if there was one. Trueflation as well. Love this metric. On the website, you can click on this link here and it'll take you to a page showing why I like this. Week over week, we're a measly 0.04% up. Can't hate that. Still under the 2% the government's wanting, still showing a lot lower than they're reporting. I do find the government data to be a bit more lagging. Whilst I wouldn't necessarily say this is leading data, it's more accurate. It's a broader scope. I quite enjoy looking at that. Fear and greed index for the markets, neutral, given where we are in the market cycle and we're flip-flopping between highs and tiny pullbacks. I think this is pretty impressive. I think there's a bit of fear creeping in at the minute, like how high can we possibly go? But a bull market can go on for quite a while, and even if we did have a pullback, that's probably a great buying opportunity in this market. Same with not necessarily the same with crypto fear and greed. We are just now creeping a little bit into greed, but not by too much. Pretty impressive given the rise we've had since Germany finished selling. I do expect a little bit of a pullback in the price there. We'll talk more about that in the charts video that I'll release as well. But overall, there's plenty more greed to come into both these metrics, indicators, whatever you want to call them. Next thing I wanted to talk about were a couple of things happening in the market this week. I don't have too much specific market charts or anything like that to show you today. I just wanted to talk a little bit about Netflix. They had earnings. They weren't great. They weren't bad. Steady Eddie. The company's quite large now. I'm not really expecting them to shake too much up. The main reason to look at Netflix is more as a guide, get the temperature, what's going to happen, how earnings are going to probably unroll. They're pretty good for looking at how the consumer's doing. They did report some subscriber growth, which I think a lot of people still look at, even though they're going to remove that metric in the future. I did a quick little breakdown on my website for the earnings if you want to go check that out. Not too detailed because I don't hold this stock. I'm purely using it as a temperature gauge, as it were. If we look what happened on earnings on the chart, bit of a sell-off when the numbers first came out, but nothing major, and it pretty much closed flat. I think that's probably because there was a sell-off into the earnings, even though the market's taking guidance quite seriously still. I don't think there's too much fuss here. And we did have the bull market band as a bit of a backstop. Big picture though, given the comments in the earnings call about numbers in the future, definitely retailers getting weak. So we can take that away from this earnings. Things are good in the past quarter. Things might be okay in the near future, as they did lift guidance, even though not as much as anticipated. So just definitely some caution creeping in here, guys. I think if we get cuts, this will be okay, and they'll end up beating these numbers. But if we don't, things could start sliding more. Obviously, the Netflix earnings report has been a little bit overshadowed by the CrowdStrike event. A lot of people asking me if it's a good time to buy. Personally, I'm not looking at this. We can see a lot of people have been looking at this as a bit of a technical bounce at this historical level. And I mean, they've been able to scrape about 10% back, which good for them. Personally, I'm not touching this. There's way too much risk going forward. We've got a lot of red flags. I don't know if there's going to be financial implications in terms of fines, as insurance is probably likely to cover a considerable amount of this. But there's a lot of issues now. Companies are going to want to diversify away from CrowdStrike, not necessarily stop using their products, but definitely purchasing some assurances for redundancy's sake and whatnot. So I think the competitors to CrowdStrike will probably benefit quite nicely from this going forward. I think over the next few quarters, EPS and revenue are going to drop. I think that's just going to be a side effect of people starting to move some of their business to other companies. But I mean, we're going to have to wait and see. I don't want to buy something with this much risk. We see stuff like this happening a lot. This is quite damaging for the reputation of CrowdStrike. A good example of that would be the company You. They did some quite harmful damage to their customer base, and they haven't really recovered from it. In fact, I'll pull up the chart quickly here for you so you can take a look. Unity Software. It's been hammered and it's never really managed to get back. I think I bought it initially around here expecting good things as they start to get profitable. Doesn't look like that's going to happen anytime soon due to the payment changes they made. They took quite a blow and things have just ground down steadily since then. I think they've got a new CEO in now. I did sell a lot of my position. Probably need to look back into that one though. It's quite a small position that I'm holding now, but I'm not expecting anything wild for a while. Other than that, I did touch a little bit on the Trump assassination, how that's going to affect the economy overall. We did see a lot of initial risk on in the market. That's cooled off a little bit since we've seen his comments on tariffs and such. If you want to see more about what I've said about that, go ahead and look on my website. I think there's also a little bit, if we scroll down here, on the Russell small cap stocks, and then a bit further down there's also some stuff about the S&P, what happens after cuts. But I'm going to wrap up now though, because my allergies are kicking my booty and I need a little bit of a rest before I put the charts video out, and I think a lot more people tend to be more excited about that one. Macro is quite important, but obviously people find it a bit boring. I'm trying my best here, but I can't really slide in many jokes about finance. So give me a like, share, subscribe. Maybe I'll try and find some more jokes for you guys. Enjoy.
Oh, that's ISO? Rack it up, I got a